Hey, hello guys. How you all doing? I hope Leshapo. And today it's a Wednesday. The last time we checked our Nasdaq was on a Sunday, and we were just looking for opportunities as to like what we can do for this week, what to expect. So if you are new here, make sure that you subscribe and you hit the bell icon, because on this channel that's where I teach you guys, the tricks as to like what you can do for you to improve your trading, and yeah, if you're interested, I also have a mentorship where I teach all these concepts that I've been showing in my videos. Okay, let's get started. So on Sunday, if you don't remember what I said when you're doing the analysis, I said this is what you have currently. So you can see that the price is right at the peak of um this daily resistance, right? And we still have enough room, decent room, before we can hit that opposite resistance, which is the monthly one. Remember the horizontal line? I said that's where the monthly zone starts. So should the price break it like that, it means this will not be there. Now we've got enough room to hit that, and then if you get a pullback, you can take it from here and then hope that it will push to that. You see, that's only if it breaks that level, because if you're looking to buy now but yet you are inside the area of resistance, you haven't broken it, that's too risky. Rather, if you are interested in buying, wait for the price to break it, go to the other side, so that when it pulls back, you can hope that it will go up, because this won't be there anymore. Because you can buy and hope, and then the price will still come back and then break that, and then maybe retest and still go down, and maybe go to that weekly. Remember that weekly zone? I said, should the price come back to it one day, this one, I said, should the price come back to it one day, you are going to look for buying trades from this. You see? So we do all depend on what the price is going to do from here. So we were on daily, right? So that's what we're having. We're saying it will, if you want to continue buying, it will make sense if it goes up like that. And if you want to continue selling, it's no longer a good idea, because of what I always tell you, that the more a level is tested, the weaker it gets. It's no longer a good idea. And you can see the price is creeping up. This was the sort of a first test, second test, third test, fourth test, the fifth one, and now it's getting to the extreme, or the highest point of that zone. So it can still break it. You can see that the sellers now are struggling to contain this. Usually they would just turn here, test it, go down. But now if you're going too deep into the zone, there you can see that the sellers now, they are struggling to really contain the price. Price was still here, and I made a very like, the point that I made was that because this horizontal line that I drew here, it was a daily area of resistance at the time, and it was being challenged. Yes, it was this area here. And when I made the thing, let me just mark the area so that I can show you. I'm sure if you watch that video, you'll remember. This was the nearest area of resistance that we had at the time. This. Something like that. Yes, like that. This was the nearest area of resistance that we had at the time, and the price was right at the peak, was here, but it hadn't yet took out the the zone. It was exactly at the peak. It was a Friday, it closed, and then when Monday we found the same structure. And I said to you, we have got two possibilities here, and currently, because of where you are inside a daily resistance, which is not a good idea for you to look for buying opportunities, even though you can see that price has been doing this. We were here, so it's not a good idea for you to look for buying opportunities. Like, it's not safe. Yes, the price can just go up, but judging from where we are inside a resistance, so that's an area where you'd be searching for trades to go down. So searching for trades to go up was not a good idea. Option number one was that you wait for the price to go down. If it doesn't break that horizontal line, let's remove this so that we are only left with the horizontal line. So option number one was that for you to get a reason to sell on that H4, because remember we are here. Let's go to H4, because this is where we made the decision. We had a trend line here on H4 at the time. Our trend line was something like that, and I said to you something like this. I said to you, option number one would be that the price does not go like that. It comes down, breaks the trend line, and maybe do this before it can give you a reason to sell. Like, the sellers, they must convince you first by breaking the structures of the bulls, because at that time bulls were the ones that were in control. So if the sellers don't convince you by breaking their structure, then you don't enter. That's what the agreement was. And option number 2 was that you wait for the price to go up and convince you by taking out the resistance, meaning the sellers are defeated. Then you can just wait for a pullback to the nearest support and buy from there. So let's see which one played out. But at first, let's just go to the higher time frame, just so that I show you that nothing has changed here. We still have your area of support and your area of resistance. You're just in between. So on monthly, nothing has changed. On weekly is the same thing. You had your trend line there. You have your area of support there. You have your area of resistance there. You are still in between. You still have space to go either up or down. So on daily, the new thing that you have is that you broke the daily resistance, the one with the trend line, like the horizontal line that I marked. Remember, it was your daily resistance, meaning because that one is broken, the one that was here is broken, you have to move up and find the next one, so that you always know where the next resistance is at and where the next support is at on any time frame that you're trading. So here you can just pick this one here somewhere there and say this is my next resistance on daily, which is still slightly far. You still have space to go up there. So now that you broke the one that is here, what's the plan? From here, the challenge is that we had a zone here, but I want you to listen to me very carefully. Just because you had a, like here, just because you have a support and you're in an uptrend does not mean it qualifies to be traded. This is something that if you've been watching the videos here, it will ring a bell. I always tell you that when your support was formed there and the price goes up with this candlestick here, in this case it went with this candlestick, it goes up. If it doesn't stay there and then come back, we're not gonna take it. We don't want the bulls to convince us and then next candlestick the bears take away that by going all the way down to the zone. The bulls must stay there to show us that yes, they have the strength by pushing up and even staying there before the bears can try and pull down. Then that's when we can take that one, because of what the bulls have convinced us. And another one was that we wanted the price to sort of I told you about the pin bar. There's a video that I made about the only candlestick shapes you need to understand or you need to learn. The rest, they don't matter. So I said with the pin bar, when the price is forming, in this case it's a bullish pin bar, right? So if you have a bullish pin bar and you fail, if usually when there is a bullish pin bar and the bulls, the next candlestick goes above the range of that bullish pin bar, they have a chance of continuing like that. But when you have a bullish pin bar but the bears fail to break the range, only to come and break on the other side, that's not a good sign, you see. So in this case, you had a nice bullish pin bar there. Maybe if you're holding your buy trades, you're thinking that you've got a structure that shows that the bulls are still in control, they will still push to, remember, the next opposite resistance. You were thinking that it will push from here maybe to the next opposing resistance. In this case, they disappointed you. They went lower than this, but the zone that they went to, it was not something that you're supposed to trade, because of what the price just played here. It never gave you anything above. So now let's come to H4. Remember, on H4 we had the horizontal line was here, right? Somewhere around there, somewhere around here. That's where you had the horizontal line. And we're saying, should the price break to the upside, you are allowed to search for trades because the resistance has been broken. So in this case, what happened was that the price tried to come down, but in that time when it was moving down, it did not break any bullish structure. Like, it didn't break a bullish trend line, it didn't break an area of support. So the bears, whatever that they were doing there, we were not in an uptrend, in downtrend. It was just a pullback, because you did not challenge any structure of the current or of the trend that you had during the time. And from there, the bulls managed to go up, and that's when they broke the horizontal line. Meaning, which area of support broke that horizontal line? In this case, is this guy here. This is your support that caused the move and broke the horizontal line that marked what? That's where you had your daily resistance, and so the move from that support is the one that broke it. So because you had a new high, That's when you had to make sure that you update your structures and then say, oh, now the new trend line I have is around there. And this is my nearest area of support. Remember, the thing that we made on Sunday was that you have got two possibilities. If the price go down, because remember the bulls are the ones that are in control, see? So for me to trust the bears and sell around this level, I want the bears to, if they had went down and broke the trend line that you had maybe and then pull back, maybe you would try and give them a chance because of what they did. But I said at the same time, you cannot give the bulls, just go and give the bulls and say I'm buying because of where you are. You're still inside a daily area of resistance. If they go up and break it, you remove it, you mark the next area of support, you look to buy from there, which means in this case, because the price went up and broke the horizontal line, which outcome played out well. It was the one where we said you're looking to buy because now you broke the resistance that we were worried about. So immediately after it was broken, that's when you were supposed to go and mark this as your nearest support. That gave you a move up and broke that area of resistance. So when the price went down there, you were supposed to look for trades to go long, which means the time when the price came here, you were supposed to buy. You can see it went inside, it bought from there until the highest point there. Hope you can see that. So that's where you're supposed to take your buy. But now, because it's coming for the second time, this level has been tested already, it's no longer fresh, you can't just go and buy. You see, you gave it a chance. The bulls, they they tapped there, they collected their buy orders, they went up. Some of them they exited. Now the price is coming again. That's not a good sign. I cannot buy here again. I cannot do that, especially on this time frame, knowing very well that the price has been very overextended, or some they call it overbought. But we cannot just sell because of what? There is an overbought. All you have to say is that the price went up, but it didn't convince you by doing what? By going up and then creating a new level that you can say it looks convincing. In this case, it was just two pin bars. They were defeated, and then it came to the same level where the orders were collected before. So you don't have enough buy orders, which is why you are interested in the first touch, because that's the one that's gonna find enough buy orders and have a higher chances of being respected and the price going up. So what the price did was that, but keep in mind that on your daily, you still have enough space to your next area of resistance. Don't forget that. It's just that this area of support we couldn't take on daily because the price went up and quickly came back without giving us, playing away from the level. Keep that in mind. So meaning if we get reasons to buy on a time frame where the trend line is still holding, we are more than welcome to buy, and we still have space before we can hit there, unless if the price the structure changes completely. But that one we cannot predict. Rather, price does it, then we'll say, oh, it seems like the structure has changed. So now currently, let's just put the daily trend line so that we know, we can just tell if it's either you put it here, it's up to you. You can put it like this if you feel like this is a pullback and not a sideways move, right? If you feel like it's a sideways move, you need to bring it here and draw it like that. That's your it's your daily bullish trend line, and you can see that daily time frame is still bullish, sort of a consolidation, but it's not a strong bullish. You can even say consolidation because some structure here was taken out, but we're still respecting the trend line is not yet taken out, and now it's approaching an area of support, and this one looks better than the one above because at least this one we had that before coming down. So that's where, when the price gets here, that's where we'll be saying maybe we will get reasons to go long. Let's mark it. This is your next area of support on daily, and this is your next area of resistance on daily, the one up there. So you can see if you're to get a trade here and then you're targeting that, but this has to be your take profit 1, take profit max. That's where you are done. Unless if the price comes down and doesn't give you reasons to go long, it breaks to the downside, then you can say a bullish trend line has been taken out, areas of support have been taken out. Now you can start to trade from this direction and hope that something like this is going to happen. And you're going to continue with that until the day even the structure of this is taken out. Then that's when you change and trade to the upside again. That is how you should do it. So let's check H4 so that we can plan. So we are saying keep in mind that this is this big one, it's your daily support, right? So now that, and this is your daily trend line. Let's see, it must start exactly here. So that's your daily trend line, and this is your daily support. So meaning this is where you're going to be searching for trades to go long, and you can even take this small H4 support inside the daily support and look for trades from there. But on the H4, the trend is bearish. But if the price touches this daily and go up, you're not going to look for selling there, because now it will mean that the price is coming from a daily support and is going up towards H4 resistance. You can't try and fight that support with the resistance stuff, unless if the price was to go down, to go up without touching this, then you'll know that your thing is not yet in place, in control. You could take your chances. But now if it comes here, if it comes here, you know it is in control, which is why I'm saying it's safer for you to buy here than to try and take trades to the downside, because the higher time frames, they are still very much bullish. So rather you wait for the price to touch this and then search for trades to go long. If you don't have any confirmation, then you don't have a trade. So that's basically how you check your Nasdaq. So you see, now this is what I'm always saying. Like, even when we're here, I always give you the possibilities. I'm not saying you should then just go on your chart and start executing trades. No, assess your structure. Look out for these sensitive areas, and that's where you're going to search for your trades, and that's where you're going to exit. You see, you cannot just say, because I know this is bullish, then it means I can just buy anywhere. Because what if it's now the time for the price to have like a pullback? Which is why it's much safer when you know the right areas where the price has got higher chances of reacting from. So that's where you search for your trades. All right, so soon we'll be starting, because remember with the class, with the group 1, we did our classes. They're just having their own sessions now. I join here and there, and then I give feedback and stuff like that. But soon I'll be starting with the ones like a new group. So I think we left with about 4 or so spaces still available before I can start with them, because I just want 10. And group 1, even though they are done, they're still my people. We will still, if they are organizing a session, I'll still join, I'll still give my input, I'll still correct them here and there if they need to be corrected. I'm not saying just because now they are done with their classes, I'm done with them. No, I need to make sure that they get it fully. They do get it, but they still make slight mistakes here and there. But I want to make sure that I still keep them. They still keep their group. I still continue with some sessions, here and there with them. But now they are in control. They are in control of their own learning, because I'm done teaching, but I'm not going to dump them. All right, so this is what you can expect from Nasdaq from here. And if you are interested, you will just hit me up on Telegram, and then we will take it from there. So this is basically how you should read the structure. You don't have to stress about anything. All you need is to understand where you are, what's the trend, and where can I try and join that trend. And if I'm joining, where can I exit? You see, those are some of the concepts that are very important, and they are often overlooked. People, they just take them for granted, because just because you want to buy, but if you don't plan where you're going to exit, that trade you might end up being a disaster. Because it's not about being in the trade, it's about you looking at the structure, making sense of it, and say, I know this is how the price is moving currently, this is the type of a trade I want to take. Knowing that alone is not enough. You still need to know, where exactly am I going to execute that trade? How much am I going to risk? Risk management is still very important, because even this level can look so nice and still fail. You see, you'll never know which level is going to hold, which is why you must always make sure that each and every time when you do your when you are taking your trades, you calculate your risk in advance to say, based on my account size, I think this is how much I can risk on this trade. And if I'm entering from here, I think it's safer for me to exit from around here. You see, these are the things that you need to do while you're planning to take your trades. It's not something that you say, let me just enter the trade and then I'll see based on how it goes, I'll then decide where to place the take profit. That's poor planning. All right, guys, so I think I'll see you in the next video. Sharp.